Last month, Bitwise Asset Management filed for a Bitcoin futures ETF and recently filed for a physically backed Bitcoin ETF, which would trade based on the price of actual Bitcoin rather than Bitcoin futures. Joining us now to discuss is Matt Hougan, Chief Investment Officer of Bitwise Asset Management. Hello there, Matt. Thanks for joining us. Quite a day for the ETF industry. Your reaction initially to the potential of a Bitcoin futures ETF finally getting through the SEC?
I think it's a great day for crypto. It's a great day for the industry. I think we're all very excited about it. We've been waiting for it for 8.5 years. The reason it matters is that there's a whole class of investors, professional investors, financial advisors, financial planners, who aren't able to access Bitcoin easily today. It doesn't pipe through their systems. It doesn't settle with their custodians. And these people control the majority of wealth in America. An ETF, a Bitcoin ETF, even if it's a futures ETF, which is imperfect, allows them to access this market. You know, if you look back over crypto over the last, let's say, 18 months, we've had a series of 0 to 1 moments. We had pre-MicroStrategy and post-MicroStrategy. We had pre-Paul Tudor Jones and post-Paul Tudor Jones. We had pre-El Salvador and post-El Salvador. This is another one of those 0 to 1 moments. This is opening up crypto to professional investors, and it's actually a very big deal.
So, Matt, are you looking to do futures-based ETFs, or are you still trying to do a spot market ETF?
We're looking to do both. We have a filing for a futures-based ETF, which is on a calendar to go effective if the SEC doesn't object by the end of November. We think most investors would be better served by a physical or spot Bitcoin ETF. You avoid issues like contango, you avoid issues like trading slippage, you avoid issues like position limits. A futures-based ETF is not going to track the price of Bitcoin perfectly over time. It'll be great for short-term trading. It may be better than other alternatives that exist in the market today, but sort of the platonic ideal of accessing the Bitcoin market through an ETF structure is a physical ETF, and that's why we filed for that. So we'll do a futures-based ETF if that's all we can do, but long-term, the money, the interest, and the best service for investors is going to come through a physical ETF.
Well, Matt, maybe you can explain why a Bitcoin futures is more palatable for the SEC rather than a spot Bitcoin ETF.
Yeah, I think you have to look at the SEC and say they're taking a crawl, walk, run approach to moving crypto into the ETF ecosystem. What's the smallest increment that they can do to get us from no ETF to an ETF? That's a futures-based ETF. Futures are regulated. They run through the 1940 Act, which is a more robust investor protection act than what physical ETFs would do, which is run through the 1933 Act. So they're taking the smallest step possible. The next step after that would be a physical Bitcoin ETF. And then ideally, we'll see the market open up to cover Ether, to cover other assets, to cover an index-based approach. That's what investors ultimately want. Now, even as I say that investors would be better served by a physical ETF, which I think is very true, I think you have to applaud regulatory courage when you see it. You don't see it that often. We've been waiting 8.5 years for a Bitcoin ETF, and it looks like we might get one by tomorrow, and that's going to be a great thing. So it's the smallest increment. We should applaud them for doing it if we in fact get over that hurdle. And then we're very excited to move forward to the next iteration, which is a physical or spot Bitcoin ETF.
So, Matt, has Bitwise or any related entities been in the market to buy Bitcoin futures ahead of the potential approval?
No, Bitwise, of course, is primarily a crypto index fund manager. We manage the Bitwise 10 crypto index fund. We're just seeking to get people exposure. But you can look in the futures market, and I think you see signs that institutions, hedge funds, and others are getting into the futures market ahead of the possible approval of an ETF. Examples of those signs: yesterday, the CME market did $4 billion in trading volume. That was 4x the trading volume on Coinbase. It was more than the trading volume on Binance. Right now, the October future is priced at $60,000 against Bitcoin trading around $53,000. That's people putting buy pressure on that front month contract that these futures ETFs are going to have to buy. So Bitwise is not doing it, but you can look into the market and you see people doing it. You see people positioning ahead of what is now most likely looking like an approval Monday or Tuesday of next week.
Matt, can you break down a little further for us, though, this logic, which I think is a little bit opaque to some people, about why a Bitcoin futures ETF is more palatable than a physical Bitcoin ETF, in the sense that my understanding that the SEC is concerned about things like market manipulation, price volatility. Like, wouldn't those same concerns also apply to some degree to a Bitcoin futures ETF? Maybe it's just my own misunderstanding, but I don't quite understand the logic.
No, you're absolutely right. I'm going to put on my old ETF hat. I was the CEO of ETF.com. Futures-based ETFs and physical ETFs go through different regulatory pathways. Physical ETFs go through the 1933 Act process. As part of that, you have exchanges having to file a 19b4, which, among other things, has to show that the underlying market is not subject to market manipulation. 40 Act product, like a futures-based ETF, go through an entirely different regulatory pathway. And there's actually no requirement for an exchange to file a 19b4. As we've been discussing, it just goes effective after 75 days unless the SEC objects. So there's actually a slightly different regulatory standard for 40 Act ETFs, which are futures-based ETFs, versus 33 Act ETFs, which are spot ETFs. Now, in the end, they're giving exposure to the same market. Right, the futures product settles to the prices in the spot market. So they're giving exposure to the exact same thing. And you're pointing out a peculiarity, which is you would think the market manipulation standard would apply to both. But those are different regulatory structures. There are additional investor protections in the 40 Act that the SEC is looking at. And again, from abstracting away that regulatory complexity, I think the right way to think about it is crawl, walk, run. Right? It does follow the rule of the regulatory law, but I think there's a bigger sort of philosophical thing at stake, which is let's do the smallest thing possible.
Thanks. That was actually a very clear explanation. I really appreciate that. So just to follow up on a point that Nick raised, like back in the day when everyone was like really excited about an ETF, it seemed like this was really going to be an on-ramp to more sort of like ordinary investors. But since then, there's been a lot of progress. It's become a lot easier for people to access the Bitcoin market, not necessarily going through an exchange. So other than kind of like the symbolic significance of this here, like how is this really going to open this up to a new world of investors? Because it seems like most investors who want to get into Bitcoin, even if they don't want to go through an exchange, still can.
It's absolutely going to open up to a large number of new investors. I'll give you an example. If you're a self-directed retail investor, right, if you're managing your own money, you're totally comfortable opening a Coinbase or other exchange app and making that allocation yourself. But most of the wealth in America, 40% of all the assets in America, are controlled by financial advisors. I'm at a conference in Boston right now. I just spent 2.5 hours yesterday on stage talking to 100 financial advisors about crypto. None of them are allocating for their clients, or very few are still allocating for their clients because it's not easy. They're not allowed to allocate in an app. It doesn't report into their reporting software. They can't charge fees on that. So it's absolutely true that self-directed retail investors are able to access crypto easily right now. There are a lot of great choices. Financial advisors, who again control about 4 times as much wealth as retail self-directed investors, are left with difficult options. They can come to Bitwise and buy our crypto index fund or our Bitwise Bitcoin fund, but they have to do it as a private placement with individual paperwork. They could buy GBTC or BITW, but then they're coping with the potential for premiums and discounts. So for this group of investors, which again, I can't emphasize enough, is 4 times the size of self-directed retail investors. For this group of investors, an ETF is the first and easiest way to gain exposure with the push of a button, instead of having to go through a series of hoops or deal with other imperfections.
Matt, former SEC Investment Management Director Dahlia Blass has warned against 40 Act funds back around in 2018. I wonder what has changed since then. Also, just quickly, your CME Price Discovery report that was released, I believe, an application yesterday. Bitwise claimed that most price discovery for Bitcoin is on the CME and not any crypto exchange. I just wondered, that sounds like an incredible result, and maybe you could quickly explain those.
Yeah, that's what's changed. What's changed is the CME market has become the most important Bitcoin market in the world. That's what we dropped 150 pages of research to the SEC and published it online, showing that the place where price discovery occurs in the Bitcoin market is in fact on the CME market. That's where institutions are allocating to crypto. It has huge trading volume. The reason that's important for regulators is the key objection to a Bitcoin ETF in the past is that you couldn't protect against market manipulation. If market manipulation occurred in the spot Bitcoin market, you couldn't surveil it and correct it. If the CME is the leading source of price discovery, well, all of a sudden you can. Big picture, this has become an institutional market. That's a process that's been taking place over the last 5 years. But the fact that the SEC appears to be comfortable moving ahead with a Bitcoin ETF as early as next week shows that there's a recognition in Washington that this is not a retail play thing. This is an institutional market. It's a legitimate asset class. And at least now we can help investors get exposure to it.